Back with the market right here on ET Now. Let's welcome on board Anuj Kumar from CAMS and talk about how their quarter panned out. Anuj, hi, good morning. It's been a healthy Q4 of profits. What's led to this strong growth of 32% while revenue growth has only been 15%?
Sure. So if you look at our results, they broadly reflect an improving business environment. I would say that is the strong underpinning. In 4Q, if I give you year-to-year numbers, our revenue improved almost 15%. Within that, mutual fund assets, which were on a strong clip during the quarter, asset-based revenue moved up almost 18.5%, and then our transaction revenue moved up almost 21%. I'm still talking about the mutual funds business. So collectively, this contributed to about a 15% up in revenue. Our PBT, like you said, moved up 20%. PAT moved up almost 39%. Why is there such a large divergence from revenue to profit? I think the answers are just two or three. One, of course, there was strong cost management across the line. Other income got a strong fillip just given the yields on our investments, which did very well during the year and during the quarter. And then this was also driven by lower tax rates for the quarter, which is why on about a 15% revenue growth, you see a 20% PBT growth and almost a 39% PAT growth. So that's how the whole thing ties up.
Also, one of the key trends post-pandemic has been heightened retail participation in equities. Given this backdrop, Anuj, what is the kind of growth and profitability that you foresee for FY22?
We are tightly coupled to the mutual funds markets. Mutual funds have grown assets at a compounded rate of high teens over the last 5 years, if you take the period 2015 to 2020. And while nobody was expecting this, even in 2021, which is FY 2021, the asset growth was almost 19%. Now, if you'd asked me this question in the first quarter, nobody could have imagined that that kind of growth would happen. But it did. So our belief is that with rising penetration, with rising investor education, mid to high teens growth of the mutual fund assets is a reality and is likely to continue. And within that, for us to post mid-teens revenue growth and mid-teens profit growth looks like a real possibility. That has been the trend over the last about 4 to 5 years, and we expect that will continue. There is always some impairment which happens due to a pandemic or the overhang of a pandemic. There are some income contractions, some businesses are shut for a period of time. But like we are seeing, 1Q is not as severe as 1Q was last year. It is far less severe. And therefore, with the pace of vaccination picking up and retail businesses continuing to kind of function in most parts of the country, the lockdown has been easier this year. We expect that the impact will be much lesser than what it was last year.
Sure. So one is seeing higher digitization for sure. Competition from fintech players as well has heightened. Tell us about the overall digital strategy as well as the digital platforms going forward.
So there are 2 or 3 trends which are visible. One is just the trend which is at the foundation, which is penetration of smartphones and penetration of internet. That just drives up usage and drives up some do-it-yourself behavior across product classes. So financial services, financial products, capital markets and mutual funds obviously face the same trend, and it's a very positive trend. And we've seen that for our own digital properties in 4Q, we almost posted historic highs in terms of transactions and user acquisition across the board. Fintechs, on the other hand, come in and they innovate on the product side, the product delivery side, and the service delivery side, which means can something be done and delivered in a different way, and can a completely new product be delivered? And I think we're seeing a significant amount of innovation both overseas and in India in terms of how advice is delivered, how transactions are concluded, and various other things, including tax advice, wealth management, etc., how they are done. This trend will only become richer. It is becoming richer globally. India will not be untouched. And in fact, we are kind of the leaders and bellwethers in some of these aspects. it will continue to initiate more consumer action. Consumers will find it easier to participate in the mutual funds and capital markets. And therefore, it's just a positive trend across the board.
Right. Now, the levers, can you just walk us through the levers that you have on the marginal front as well as your operational efficiencies? What's the outlook?
So we continue to automate our business across the board as much as possible, which means that we continue to believe that it should have as much of a platform color. Although there's a thick stack of services that we offer to the market, but as much of that we can automate, we continue to automate, which has both improvements in productivity and improvements in the risk profile because we deal with large amounts of money. So that's clearly one trend. And across the board, as we are digitizing, we also see that the fraction of in-person meetings, paper transactions, those kind of things continues to contract, which is again efficient for the market and efficient for us in terms of overall productivity benefits. So we continue to focus on this, but we are very wary that new and first-time investors need a lot of handholding, need in-person care, and a very personal touch. So we continue to invest in our service network. We continue to build out and have capable staff at our front offices and in our branches. But overall, I think automation and digitization will create the productivity benefit for us over the medium term.
And given that the company is the largest, India's largest registrar and transfer agent of mutual funds with an aggregate market share of about 70%, can we expect a higher market share going forward? What is the strategy in place in order to capture more market share over the next few years?
So we've had market share expansion in the last 5 years of 9%. We were at about 61% and some change in 2015. And we've grown to just about 70% in 2021. That has largely been led by market share gain of our funds in terms of their own asset share gain. At 70%, we are defenders. So we continue to believe that our funds will continue, given their brands and their established demonstrated fund management capability, will continue to show a share creep, and we will continue to grow with them. So therefore, we are expecting that share will continue to creep. Will it happen at the same pace as it happened in the last 5 years? That's anybody's guess, but we believe that share gain will continue to happen.
Finally, how has the traction been in terms of the debt markets, and are there any key trends that you would like to share?
The only thing I would want to add is that, like you've seen in our results and like you've been reading about mutual funds in the sector overall, I think the participation in the markets has been upbeat, like I said. Apart from equity as a class, which has kind of come back on its own, starting specifically the fourth quarter, I would also say that debt as a class has seen very improved participation and upwards of 40%. Just asset growth from the beginning of the year to the end of the year. All of this and the increasing participation in SIPs registered, new investors coming in, and digital access, etc., is creating the right infrastructure and the right environment for investors to take advantage of this. And we, as core participants in the capital markets and in the mutual funds arena, continue to enrich our capability in the marketplace to service investors, service sellers, distributors, just every part of the ecosystem, so that this entire product class continues to become stronger and more accepted by the general public.
All right, thanks much for taking time out, Mr. Kumar, and giving us a view as to how things are shaping up for CAMS. On that note, we're completely timed out right here on the show with news that we're at 15,320. We'll wind it down right here on the show. Thanks for watching.